Step back and see the macro and digest it down to the micro. Trading, investing, and geopolitics from macro down to the micro. Welcome to Macronomics.
Welcome back to Macronomics. Welcome. Today, guys, I'm excited to share with you guys just where I've been at, the process we've been taking and learning. Yes, today we're going to be talking about Warren Buffett and specifically Benjamin Graham, which was his predecessor in the sense of what and who taught him a lot of what he knows. Now, primarily, guys, where we're at now, we've been allocating a lot of our savings. We still trade. And yes, this is, for anyone who's new to macronomics, we talk about trading and investing. And so today we're primarily talking about investing. And so investing, guys, we finished a book not too long ago called The Security Analysis. And this is by Benjamin Graham. And we're going to be diving into The Intelligent Investor, which, from critics, is one of the best books on investing ever written. So, at least publicly and or modernly. So right now, we've been allocating our savings and just building a fund, and then just learning how to deploy those savings as a vehicle. And some of the companies that we've been breaking down is Spotify, Shopify, Google, Porch, Franklin Investment Group. And what we've been doing is just identifying companies that we have an interest in, that we understand their business model and as well as concept, and then being able to calculate the intrinsic value. That's primarily the main way that we're investing currently, is through an intrinsic model. So being able to learn the intrinsic model, and then from there being able to see, is this trading at a discount? Is this something that we can use, or not use, but is there a safety of margin? So simply put, guys, what it is we look for a company. What's its intrinsic value based on where it's at? Is it on sale? Is it overpriced? From that point of calculating its intrinsic value, we then we have some other parameters, such as, is the company invested in its own stocks? Is the management own shares? Who is the CEO? What is their moat? This is just some of our, and guys, we're not there yet, nor will we ever be, but primarily it's right now we're just putting together a system for us, extrapolate from what we've learned and incorporating that. And so today, overall, that's just a little quick synopsis of our model as far as investing. We're excited about diving into it just because, we look at it as a vehicle, as something that's active and that we love learning. And, yes, trading is definitely a lot more active, but I would go as far as to say investing is as well. It's just you're not actually trading on the charts. It's more fundamental. So it's math. It's identifying some of the parameters around the company and being able to, identify value. And so that's where we're at. We're excited about breaking that down further. We was also going to share that with Porch specifically. We've been investing in this company for a couple years, and what we've decided is part of our portfolio, we don't want to allocate all of it to just one stock. We want a dollar cost average. But with this specifically, being able to, we actually have, we're allocating a small amount. I think it's like 3% of our portfolio to Porch. And the reason why is, in the short term, it's more like a short-term investment / trade, because we see the potential, as well as pretty much the stock going up. So this is more like a trade / investment. We didn't really base it off of its intrinsic value. If we was, then of course it would be a lot our time horizon would be a lot longer. But our time horizon for this investment is primarily based on its current price and some of its fundamental analysis. So we decided to allocate a small portion there. And again, guys, as we move forward, I feel like, I love what Warren Buffett said. So for anyone who doesn't know Benjamin Graham, he's like the godfather of value investing. He's the one who essentially coined this term. This was back in the early 1900s, around that time frame. And one of his most famous students is Warren Buffett. And so Benjamin Graham's thesis, his philosophy, was essentially finding a company, identifying their intrinsic value, identifying their margin, their safety margin. So like if you bought it, how much lower could it go? Would you be safe? And identifying whether it was on sale or not, essentially, and then buying and holding. And now Warren Buffett in 1984, I believe, he made a statement saying that if he was to have followed Benjamin Graham's philosophy strictly, he would have been poor. Now, that's not to discredit Benjamin Graham. It's simply to say that the environment changed. And so now, Warren Buffett's philosophy and how he's gone about things, where we're at now, I don't feel is 1,000% applicable. Here's why. The environment's changing and you have to be adapting and learning. And so I feel like the key here is not to identify with the school of thought, but instead to extrapolate insights from all of these philosophies, if you will, these approaches, and then be cognizant of that in your current approach. So that's where we're at in this current market. Like we've extrapolated from Warren, from Benjamin Graham, as well as some other people who have followed. Bill Ackman, we're studying him. It's just being able to learn from these different avenues and create yours. That is huge, guys. That's huge. You got to be able to create your own. If you follow someone else's school of thought, like they got there based on their experience, most of the time. So be aware of that. So overall, guys, that's going to conclude today's episode, Investing. We're going to be talking a lot more about this. We're going to be talking about specific stocks as we move forward. Disclaimer, there will not be advice for you to buy or hold or do any of that. This is simply our experience and what we're sharing with you. And yes, we're going to be talking about trading and investing. So those are the two avenues. As well as macroeconomics, what's going on in the world and how it correlates to our portfolios and our trading accounts. So with that, guys, continue to keep bringing the micro to the macro and the macro to the micro. Keep learning, and I look forward to talking to you guys soon.